Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. The major squeezed higher once again against the US dollar today, and for some of the crosses like the Aussie and New Zealand, that represents 4 straight days of actually pretty substantial gains. But heading into Asian and European trading, the news flow is going to begin to occur that could influence, be make or break for these trends, because we have the Bank of England minutes being released at 4:30 Eastern time. In European trading, and these could suggest a further asset purchases or quantitative easings or even an interest rate change could be in the future for this cross and could move the pair down significantly. And the mother of decisions that are going to influence basically most of the trades for the rest of this week will be the FOMC rate decision, which is going to be out at tomorrow in afternoon trading in North America. Let's look at some of the pairs and see how we think they could be influenced by the information flow that's about to occur. As you can see, the Euro USD moved down last night in European trading to test once again the trend line about 125.80. This was after the Great Britain CPI report came in lower than expected and pushed down the pair aggressively. But as you can see, after the Spanish bond auctions went off, the pairs moved up aggressively, even though record yields were required to move the amount of volume that they were interested in. But as you can see, the squeeze higher broke the pair once again above the 0.382 fib level from the May lows, but we didn't make any new highs for the week, which is currently around 127.50. So as long as the pair remains below 127.50 and the 50 fib level at 127.84, heading into the FOMC decision, we'll probably see range trading between this resistance zone and the trend line support, which is around 126. Any move now after the rate decision, depending if further quantitative easing or asset purchase quantitative easing or operation twist, or even if they decide to extend interest rates even further out to 2015, if any of those things are suggested, initially we probably got to push higher through this zone. And I don't know where we would go. I mean, we could have the next resistance level would be up here at 129, which would be the 0.618 fib level. Now, if we get any disappointing, it wouldn't be disappointing if the FOMC decides to have a wait and see attitude and give it another month or so. That would be disappointing for the majors against the US dollar, because they have basically been pricing in that further easing is coming in play ever since the disappointing non-farm payroll report that happened right near the lows of last May. And there we could get a break below this trend line. And if we do that, yeah, the first level that would act as support would be around 124.40. Next pair we're going to take a look at is the Great Britain Pound USD cross. As you can see, this cross moved down after it missed its had disappointing CPI report, but with all majors, it squeezed higher today against the USD, and it broke actually its weekly high and moved as high as 157.50, but it did not move up and towards the 50 fib at 157.82. So we have a nice resistance zone similar to the Euro USD right here between 157 and 157.82. As long as the pair remains below that before the Bank of England meetings and the FOMC, we would probably range trade in between that level and the low for the week around 156.15. After the rate decision, if they announce or it becomes implied that further easing or asset purchases or interest rate changes are in the cards, we could get a break below this 156.15 level and make a move back down into this range area around 154.40. Now, if that occurs and then FOMC introduces Operation Twist or some sort of change to monetary policy, we could move back higher. That would be an interesting pair. I'd actually stay away from this in trading in such a scenario. If the Bank of England stays on hold, though, and FOMC announces some sort of policy, we could push higher, and we would initially probably move up towards the 0.618 fib level around 159. That would act as the first level of resistance. Now, the two pairs that are interesting are the Aussie and New Zealand USD. Both these pairs have moved up aggressively over the last 4 days. and are basically pricing in some sort of monetary action. If they are disappointed, we could see an aggressive move lower on these pairs heading after the FOMC announcements. We could probably initially see a move back down to trendline resistance in both crosses, which would be basically around, let's see, in the Aussie it would be around 106, and in New Zealand it would be around, let's see, it would be around probably around 79. And if we break below those trend line levels, the move would be on lower, and I would guess that we would probably move down towards 78 initially in New Zealand, and in the Aussie USD we would probably move towards parity once again. But if the FOMC goes ahead and announces some sort of monetary change tomorrow, we would initially probably get a pop above this 102.20 area in the Aussie and back into this trend line, this consolidation zone, and we could ultimately go up to 104.60. In New Zealand, the same. It was in a consolidation zone before it moved down lower, and that would get us back up to, let's see, 80, and then we could probably move back up into at least the 82.35 area. And the last pair of interest I'm going to talk about is the USD CAD. As you can see, the USD CAD broke low trend line support here, that it held the pair in check for the last month or so around 102. Now the pair is below this level, depending on, of course, what happens tomorrow. If we can hold below this level, we can also get a test of 101.35 and then further down at 100.50. So to recap, most pairs I would expect would be in a kind of a wait and hold situation before the Bank of England and FOMC rate decisions, and based on what happens from those meetings, anything is possible. So it might be better to save your bullets, so you have some ammo in the long run until after the decisions. So this is Chris Keene, and this is Currency Watch, and good luck trading.